Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Tuesday the 13th of May in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, UK pension funds agree to invest at least 5% of their assets in Britain in a win for the Chancellor Rachel Reeves.
The S&P 500 and Nasdaq make huge gains as US-China tariff cuts fuel the return of a Buy America trade.
Plus, police investigate a fire at Prime Minister Keir Starmer's house and possible links to two other blazes.
Let's start with a roundup of our top stories.
Britain's largest pension funds are agreeing to invest at least 5% of their assets at home in a new deal with the Labour government. The 17 funds who've signed up to the Mansion House Accord say the deal will inject as much as £50 billion of new investment over the next 5 years. Bloomberg's James Woolcock has more.
It sets funds who manage 9 in 10 UK savers' direct contribution pension pots a target. Keep 5% of your assets in Britain's private markets. It's a significant amount of money, but it is voluntary, and it's not the first use of the name. A previous Mansion House compact signed 2 years ago has been criticised for only leading to a limited amount of investment. This new version comes as the government weighs legally forcing funds to invest more domestically as it seeks more money for infrastructure projects. In London, James Woolcock, Bloomberg Radio.
Global stocks have made huge gains on optimism that the decision to slash US-China reciprocal tariffs for 90 days marks the end of an all-out trade war. The S&P 500 jumped 3.3% to take it back above the level when President Trump first announced those sweeping global levies on the 2nd of April. Meanwhile, a surge in big tech shares put the Nasdaq 100 back into a bull market just about a month after it plunged 20% from a previous record high. Investors also moved out of defensive positions and reduced expectations for Federal Reserve interest rate cuts. Kathy Jones, chief fixed income strategist at Charles Schwab, says there is reason for traders to feel more confident.
The market has been so volatile because it keeps trying to recalibrate what the outlook is, right? And now it seems as if the worst case scenario is probably behind us because China was the big one to get a deal with. So if we've dialed back the rhetoric, if we've dialed back the limits on China, maybe we dial back the limits on everybody else and we get more of a soft landing.
Kathy Jones speaking there following the announcement of the US-China trade truce. On the markets right now, the MSCI Asia Pacific Index is up by 0.4%. Eurostoxx 50 futures are down 0.2%, and 10-year US Treasury yields down 1.5 basis points, trading at 446.
The massive gains across equity markets and the dollar follow carefully coordinated joint statements issued yesterday from Beijing and Washington. The US announced it would slash duties on Chinese products to 30% from 145% for a 90-day period, while Beijing reduced its levy on most US goods to 10%. The rollback in tariffs appears to validate Xi Jinping's decision to stand firm against Donald Trump's tariff offensive. Speaking this morning, the Chinese president warned that acts of coercion and dominance ultimately lead to isolation.
There are no winners in tariff wars or trade wars. Bullying or hegemonism only leads to self-isolation.
The Chinese president's remarks, spoken there by a translator, come as President Trump said he could speak with Xi as early as the end of this week, touting what he called a total reset in US-China relations.
US drug makers, meanwhile, have avoided a worst-case scenario after President Donald Trump signed an executive order asking them to lower prices for Americans voluntarily. Pharmaceutical companies had feared action on drug prices, but analysts saw the order as less severe and vague. Looking for cuts of between 60 and 90%, President Trump said that the cost of US drugs should match the lowest prices in developed nations.
Starting today, the United States will no longer subsidize the health care of foreign countries where they paid a small fraction of what for the same drug that what we pay many, many times more for, and will no longer tolerate profiteering and price gouging from Big Pharma. But again, it was really the countries that forced Big Pharma to do things that, frankly, I'm not sure they really felt comfortable doing.
President Trump suggesting that other countries should pay more for medicines. Shares of pharmaceutical companies have rebounded in Asia this morning after the S&P 500 Pharmaceutical and Biotech Index, which includes names like Gilead Sciences, Merck and Eli Lilly, closed up 3.7% on Monday.
Counter-terrorism officers are leading an investigation into a fire at a home owned by the Prime Minister in North London. Emergency services were called to the property in the early hours on Monday, but nobody was hurt. The building has been targeted by protesters in the past. 3 people were convicted of public order offences last year after carrying out a pro-Palestine demonstration outside. While the home is owned by Keir Starmer, he has not lived there since taking office last year. Police now say they're looking at whether 2 other fires last week could be connected to the blaze.
And lastly, could artificial intelligence be the secret to more efficient phone charging? Apple thinks that the technology could answer a frequent source of customer frustration, the iPhone's battery life. Bloomberg's Tiwa Adebayo has the story.
An AI-powered battery management mode is set to be included in the latest iPhone software update. Due in September, Bloomberg understands the enhancement will analyse device use and make adjustments to conserve energy. The move is part of Apple's ongoing bid to integrate AI into its core features, building on the first version of Apple Intelligence, which rolled out last year. Behind the push for battery efficiency is the soon-to-be-released slimmed-down iPhone 17, which will have fewer hours of life due to its size. In London, Tiwa Adebayo, Bloomberg Radio.
And those are our top stories. In a moment, more on that promise by UK pension funds to invest more here in Britain, plus the US-China tariff cut, which turbocharged global markets. But another story that caught our eye this morning, Caroline, recently I did one of those things where you clean out that drawer of technology that you just kind of gather as
Is it
dust.
just a drawer? I've got buckets and buckets of tech at home.
But again, marvelling at how small my old phone was versus the one that I have now. And this is a trend, perhaps not smaller, but definitely thinner phones are coming back. The latest model from Samsung going to be 30% thinner. This is the S25 Edge phone, and sort of creates a nostalgia around. Do you remember when phones used to be tiny?
Yeah, of course I do.
Not to age ourselves, of course, Caroline.
The Nokia 8210 comes to mind. It was absolutely tiny. The buttons were minute. And look, I think this is amazing that the phones are going to be thinner and thinner, and yet of course the perennial problem of never having a pocket large enough for your phone.
But it gives me a strange sense of, like, I feel like my hands are giant when I've changed the size of my phone because I keep dropping it and it's the wrong size, and it's worrying how much you become accustomed to holding one piece of technology in your hand the whole time.
Yeah, and it is the race to also lighter phones as well. I mean, okay, so the S25 from Samsung is coming out, but then we know that the iPhone, the latest version is going to come out later this year, and surely that will also be a point of competition. But yes, phones getting lighter and thinner. And
with good battery life, which is the other challenge, of course, as well, as we've been reporting. We'll put a link to that article in our podcast show notes. Well, now, the Chancellor, Rachel Reeves, is unveiling a new Mansion House Accord today with the pension industry that could possibly unlock as much as £50 billion of investment into the UK. 17 large workplace pension providers have pledged to voluntarily invest 10% of assets into private markets and 5% specifically in the UK. Joining us now for more, our asset management reporter, Leo Kensherper. Leo, good morning. What is in this agreement and what is it aiming to do?
Yes, good morning, Stephen. So the large pension providers, names like Aviva, Legal & General, Phoenix, they have all signed up to this voluntary commitment to invest 10% of their assets into private markets, half of which, or 5% of the total, would be going to the UK. So to, unlisted businesses and also infrastructure projects. And M&G, one of the signatories, they have actually sent over some helpful examples of what they're already doing. So, they're a lender to Gales, the rather nice bakery chain,
oh, right.
If I may say that, and Belfast International Airport. And essentially that's what the government wants to see more of. And I think it's really important to note that this is definitely a step up. The initial compact was signed a little less than 2 years ago with the previous Conservative government, and there the goal was to invest 5% into private markets, and now that's up to 10%. There's more signatories as well, and there's also a specific allocation to the UK.
So, as you say, it's focused on private assets, so it doesn't include listed stocks. I suppose my question is, why not? And it's voluntary, not mandatory. Why?
Yes, that's a good point. So the goal of the accord is really to boost companies and projects that don't have the access to significant capital that a member of the FTSE 100 sort of already has. And a really important point to make here, in the new agreement, it says if pension funds buy shares in companies listed on the London Stock Exchange's AIM market for growth companies and also from equities, another exchange for smaller companies, basically, then that will count toward their allocation target into UK private markets. So it's quite fascinating. They found a way here to include a sizable part of the stock market here.
One of the criticisms that has been made of the previous version of this accord is that it was voluntary and not mandatory. This still isn't going to be a mandatory commitment from these funds.
No, that's right. And I think the key issue is the fiduciary duty of the trustees of those pension funds. You know, they have to act in the best interests of their customers, make the best possible investments, and being forced to invest in a particular sector or region, really runs against that. And it's quite interesting. Also in the statement, the Treasury said, progress against that voluntary commitment will be monitored, and the initiative will be reinforced by measures to be announced in the upcoming final report of the pensions investment review. So that doesn't sound like outright mandation, but it sounds a bit like a backstop where the government plans potentially legislation that will allow it to tell pension funds, if you don't follow through with your commitments, we can make you do it.
That's interesting, isn't it? That they're being pressed a little bit harder. But then the question is whether it will really work. So the first Mansion House Compact, they did a review after a year, and actually it was the ABI that did a review, and they hadn't found that it had made a huge difference. They said that there were quite a lot of barriers actually to investment, and there's also quite a big kind of get out of free jail card, I suppose, assuming a sufficient supply of suitable investable assets.
Yes, that's a very great point. And this is, what most asset managers and pension funds I talk to keep telling me. It comes down to having that pipeline of investable assets. And this ultimately depends on other government policies, like the industrial strategy, where the government identifies priority sectors for growth, and also the planning reform that's supposed to make it easier to build more homes in this country. So ultimately, the ball is again with the government and the government's call.
Okay, Leo Kenship, our asset management reporter, thank you very much for joining us.
Now, let's move on and talk about US-China. Xi Jinping's decision to stand firm against Donald Trump resulted in a massive de-escalation in tariffs. The Chinese president has been speaking this morning, saying that bullying and hegemonism only lead to isolation, and that there are no winners in tariff wars or trade wars. In a further sign of the improvement, though, in relations, China is removing its ban on Boeing deliveries. Joining us now is our senior editor, Bill Ferries, to discuss all of this. So we're a day on from the tariff deal. We've heard from Xi Jinping today. He does seem to have clearly come out on top in the tariff war with the US.
Yeah, it's hard to see. It's hard to see what the argument is for what the U.S. has gotten out of this when you go back to maybe where the U.S. was before or on April 2nd, that Liberation Day, when the Trump administration announced these tariffs on a whole bunch of countries, but which really started this escalation in the China trade war, where tariffs went to 34% and then up to 145%, and China responded with 125% tariffs in return. China's got basically, back to square one. The tariffs are down to 30%. That's 10% and the baseline that all countries have now, and additional 20% for fentanyl. But we know both countries were feeling some pain. Chinese factory orders were down. Cargo ships orders were declining as well, and the U.S. was looking at the potential of goods shortages. So both sides had a lot of reason to go into these talks in Switzerland. But it does seem that China has gotten most of its demands, and that Xi Jinping's policy of basically standing firm worked out pretty well for him.
So what does that mean about the strategy from here? We've just had this news that China's removing this month-long ban that it had on airlines taking delivery of Boeing planes. So that's clearly a sign of China moving towards the US on this as well. But in terms of what we think about next, where should we be looking?
Well, there's supposed to be this 90-day window where they continue to talk, for instance, about things like the actions against the fentanyl precursor producers. If the U.S. sees progress on that front, you have the potential for up to 20% of these extra tariffs coming off of China. So that's one area. I think both sides will try to make some progress there. Scott Bessent, the Treasury Secretary, is saying that he sees the 10% tariff at this point as the floor on China. It's the floor on every country. Even that the deal they announced last week with the UK includes the 10% tariff. I think we'll continue to see some of these sectoral tariffs, and you could see tweaks in that. Donald Trump has changed his tariff policy a lot in the last few months. So whether China stays at 30% may depend on how well talks are going or not going. But I think one thing that has come out of this that both sides would applaud is that there is this channel for negotiation now that's been created with Scott Bessent, Jameson Greer, and their counterparts from Beijing. That's, I think, a channel that's expected to stay open and continue talking.
And lastly, of course, markets hugely relieved at de-escalation. And China may well be able to hit its growth target. 5% growth target looks perhaps a bit more possible.
Yeah, absolutely. We saw ING upgrade their target to about 4.7% for Chinese GDP. I was looking at the S&P before coming in here. It's basically at the level it was at, I think, in November, around Election Day last year. So a lot of the losses have been wiped out so far. But again, you have to wonder kind of what the U.S. has gotten out of this. I think that end game remains to be seen.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.